What's going on, guys? Welcome back to another video. In this video, I've got another incredibly important AMC update to bring all of you this Sunday evening. So what we're going to be covering in this video is a part 7 to my series on how AMC is going to be crashing our financial markets. Now, I say this in the beginning of all of my videos that are in this series, that it's not necessarily AMC, the movie theater company, that is going to be the actual downfall of our financial markets, but instead, it's the hedge funds and the institutions that have taken out these massive short positions on AMC, and even in a lot of cases, illegal short positions against this company, have over-leveraged themselves, and we as the retail investors and some big institutions have taken the opposite side of this trade, and that is going to be the downfall of our markets once these institutions are going to have to cover these positions, and they're going to have to sell off a lot of their other different positions that they are holding in order to cover these shorts. Now, when a lot of this selling volume ends up coming onto the market, the stock market in its most basic terms is a reflection of supply and demand of any given security. So if there are more people willing to sell something than there are going to buy it, then the stock is most likely going to go down. Now, what is going to be incredibly important that we're going to go over in this video is the new updates that we have on the reverse repos that have been going on with the Fed. Now, we have talked about this a lot on this channel in the past, and I want to clear some things up for you guys. And in addition to this, we also have something very interesting going on with a high yield bond ETF, HYG, that I think is incredibly important to take a look at. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people as possible. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And in addition, if you want to earn 2 free stocks with Webull, valued up to $1,850, make sure you check out that link down below in my description. So quickly, we're going to do a brief recap of what we have ahead going into AMC. We all know about this $40 strike, and something that I want to bring up to your guys' attention is that we have seen the implied volatility on the options chain massively spike up over the last 2 weeks. Now, what I am predicting is going to happen is that it's going to be a lot more difficult going forward on the next couple of monthly options expiration dates to have these big pile-ups on these specific strikes, because they're just going to be more expensive, and it's going to be a lot harder for retail investors to afford these contracts. Now, these $40 strikes at one point were trading at 40 cents a contract, meaning that you only needed about $40 to enter that trade, and now they're trading at $1,100 each. And before we go any further, special shout out to Kringle Kitten on Twitter. He's helped me out a lot in fully understanding and getting a really good insight into the reverse repo market and how it affects everything going on with AMC. So if you guys don't follow him already on Twitter, make sure you guys go do that. So if we're going to be talking about reverse repos, I know not a lot of you guys may not understand this, so we have to define what they are. When we come over here, a reverse repurchase agreement, RRP, is an act of buying securities with the intention of returning or reselling those same assets back in the future as a profit. This process is the opposite side of the coin to the repurchase agreement. To the party selling the security with the agreement to buy it back, it is a repurchase agreement. To the party buying the security and agreeing to sell it back, it is a reverse repurchase agreement. So what have we had going on over the last couple of weeks of these reverse repos? So we have all been watching these. The most recent one that we have, and you can all find these on the Federal Reserve Bank of New York if you would like as well. Now, the recent one is $547 billion. Coming down a little bit further, $534 billion. Now we come down a little bit further, $502 billion. So we have a streak of being well over $500 billion in these reverse repurchase agreements. Now, how does this affect the banks and the institutions that are shorting AMC or over leveraged in their current position? So essentially what a reverse repo is meant to do is kind of siphon off liquidity or suck out the liquidity from the market. Now, we need to think about this sucking out of liquidity in a very logical way. If you keep sucking liquidity out from the banks, and we also have an impending bond sell-off coming in, which we are going to talk about as well. This does increase the chance of margin calls coming in the near future, because the banks, the big institutions, are the ones loaning out the shares to the hedge funds. Now, what a lot of people have been talking about and speculating on over this weekend is this right here. So What we're looking at is reverse repurchase agreements in the amount of $720 billion, and the remaining maturity is within 15 days. Now we can see that 9 is cash value of agreement. So there's been some speculation on whether this is a cash amount or it's a securities amount. Either way, this is going to be taking liquidity away from the banks, and it is going to increase the chance of margin calls coming in the near future. Now, when you combine that with NSC 002 potentially coming on June 21st, every single day, it seems like we are getting a lot closer to these margin calls happening in the MOAS that is definitely ahead of us, coming sooner than we all expect. Now, coming over here, this is where this even gets more interesting. The margin debt in the United States right now is at about $850 billion. We know that all of these institutions are wildly over leveraged, and if you take the liquidity away from them, this then again leads the way to even a higher chance of margin calls coming, or even forceful liquidations. Now, this is not the only thing that signifies that a major correction in our markets are coming. Now, when we come over to this Reddit thread right here, I just want to shout this individual out, get-it-got. He put out an amazing due diligence piece where he actually figured out and found all of these HYG puts that are in play going into the next couple of months that nobody has really been talking about. And I want to give this guy full credit for finding this. So we're going to go over the gist of what he is talking about in this Reddit post, but make sure you guys go check it out if you guys are interested. I will link it down in the description. So when we're talking about HYG, we have to figure out exactly what this is. So now when we come over back to my desktop, we can see that this is, as we come over here, the iShares iBox High Yield Corporate Bond ETF. Now, when you hear the words high yield, that means higher risk. So when we come over here, we can see that BlackRock, Jane Street, UBS, Citigroup, Susquehanna, Citadel, Barclays, and a lot of these other very large institutions have very significant put positions on this specific ETF. And the change in shares over the last reporting period has massively increased. Now, BlackRock in particular, as cited in this Reddit thread over here, if you click this down to the change in shares, BlackRock sold off a very significant portion of what they were holding. So typically, when we talk about HYG, if we take this chart out to the 5-year actual chart, it's relatively flat unless something major happens. So we saw back in March, we saw a massive correction in this specific ETF. So technically, and typically, that's what I meant. When we are looking at the actual trend of this ETF, it does not move. And that is reflected by these 2 screenshots provided here. So we can see that the volume and open interest on the options chain for June 4th, 2021, there was essentially nothing except for a couple contracts at the money, and we did start to see some puts pile up. Now, when we come over to this screenshot, which is going to be June 11th, we did see some more puts start to pile up, but again, the calls are relatively low, and there's really no open interest on these deep out-of-the-money contracts. Now, here is where this is going to get actually insane. When we go over to the option chain and look at the June 18th, there are a pretty significant amount of call options. Now, if you've seen any of these different videos that people are making about this, they have not talked about the call side of this, which I think is, it's always important to look at both sides of the trade. So we can see this $88 strike has an open interest of 63,000, but coming out to this $95 strike, it has an open interest of about 214,000 contracts. So there is a lot of money or a lot of options contracts betting that HYG is going to go up over the next week. But here is the most important thing that everybody has been talking about. This open interest right here on this option chain is wildly abnormal. It is very abnormal to see an open interest on an option chain that goes this deep out of the money, especially on an ETF that does not move at numbers this high: 122,000, 186,000, 132,000, 203,000. This is absolutely nuts. Now, what a lot of people have been saying when they talk about this is that the crash could be coming this week. Everybody is preparing for a major sell-off in the bond market coming this week, but that is not necessarily the case. There is a lot of open interest in a decent amount of volume for the June 18th expiration date, but when we come out to the next monthly expiration date for July, there is still an incredibly high open interest, as we can see here. Now, coming out to August, the monthly expiration date, we can still see there's a pretty high open interest throughout all of these deep out of the money put contracts. So what this shows me is that it's not only this June 18th date that we have coming up for AMC and HYG, but this situation could play out over the next 2 months. So I do not want anybody to get their hopes up on what is going to be happening over this next week. For me, I am just waiting for this to happen. I am watching my indicators, and those indicators specifically are widespread market sell-off and hedge fund bankruptcies. Another thing that this HYG put option chain tells us is that a lot of these institutions, they basically know what is happening. When we think about AMC, we know that a lot of institutions know exactly what is going to happen. We have seen Citigroup, Goldman Sachs, Bank of America, Raymond James, Jefferies, the Bank of Montreal all stop the short sales at their prime brokerages. They're not allowing their customers to short AMC or to take out naked options position on this stock and a couple of other stocks as well. This just shows us the overall state of our financial market right now, and it is pointing to a major correction. And in my opinion, the AMC short squeeze and these forced liquidations and margin calls that are going to happen as a result of this is going to be the cause of the next widespread market sell-off, and I want you guys to all be prepared. So that is going to conclude this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people as possible. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys had a great weekend and are excited for the week ahead, and I'll see you guys in the next video.